Welcome back everyone to the Moneycontrol live stream. You're watching Markets with Santo and CJ. Santo, are you bored?
Well, I've been that way for some time now.
I'm
not
dead
just
bored,
about
man.
today.
I'm dead bored. I mean, the past week has been so boring from a market perspective. And today also another session of lackluster trading. Yes, we were flip-flopping between gains and losses throughout the session, but if you look at it in its entirety, the market has not really moved beyond that 300 point range.
CJ, that's the way the market ideally should be, right? You know, it's not a place where you seek instant excitement. Unfortunately, over the last couple of years, people's habits have been spoiled. Everyone is now used to about a 1% move either ways, and suddenly when that stops happening, everyone starts complaining, starting with UCJ.
Well, Santo, if you look at the setup right now, it seems like we'll probably just close on in the green territory for the benchmark analysis. But Santo, it's been the small and mid-cap space that have been outperforming today. Clearly, the buying is happening there because valuations have become quite reasonable from the the heyday or glory days of December, January. But also, I think probably some bargain buying from retail investors, maybe HNI investors as well. Do you think?
I have my doubts, CJ. Again, it will vary from stock to stock, but by and large, I think what is leading this pullback in small and mid cap stocks at this point is that there's been a big easing in the kind of heavy selling that we had seen. That itself is good enough to kind of lift prices up temporarily. I don't think at this point, doesn't seem like it, I can't say for every stock, but doesn't look like this is a conviction based buying, especially when you have the earnings season so near, right?
Especially also the volume, the fact that volumes are also not that robust.
Exactly.
Even if you're seeing buying, you're not seeing buying at very, very high level of volume. So I think that would be the next trigger for that market should watch out for.
The kind of battering that the market has taken now, even some bit of cessation in selling is good enough to kind of have a big impact on prices.
That said, individually a lot of stock action, not only in the Nifty, the mid cap or the small cap space, you could see it across the board. Individual counters are seeing a lot of action from price action as well as volume perspective. And starting off with Santo.
Well, this is your favorite segment, broking stock. Angel One, let's start with.
I'm surprised you're going bearish, I'm sure.
How did you guess?
I don't need to guess, man. I can read your moves now. I can read your next move.
Okay. Now, see, the company has given its update for the first quarter. Now, on the face of it, if you compare the numbers year on year, there's a huge jump in terms of client base or its funding.
Exactly.
But if you look at the month on month number, that is where it the pain in the market is beginning to reflect. Just about a 3% increase in its
3% in a month on month basis is great, man.
Yes, I know that. Of course, no, I knew you would be coming to that. But here again, we need to go just beyond the numbers and look at what the stock price is trying to tell you. Now, the stock has come off almost 37% from the peak which it's seen in April. Till then, things were quite hunky-dory. And after that, volume started to come off very sharply, and the market seems to be reflecting that concerns. Already, it looks as though the market is now factoring that volumes in general will continue to go downhill from here. So I would be very cautious on Angel One despite the decent set of June update numbers that it has come up with.
You talk about 37% drawdown from the top, but you should also factor this in that the stock is actually higher by 2% on a year-to-date basis. That means it has largely outperformed almost 85% of the stocks out there in the market, which goes to show that this is not just your making hay when the sun shines sort of a bet. This is probably a very high conviction bet that investors are taking. If you look at, even if you come back to the June performance as well, the one thing that stood out for me is the fact that the client addition, that run rate was almost at 3.5% again on a month-on-month basis. Of course, on a year-on-year basis, it looks as almost 96-100%. But even if you look at it on a sequential month-on-month basis, it was quite a strong performance in a month like June, when there were fears that retail participation is going down, volumes are going down, average daily turnover on NSE was down about what 30%,
roughly 30%,
roughly 30%. So clearly, I think Angel is likely winning a lot of market share out there. I don't think this is a story of the larger broking pie expanding because of more retail investors coming in. But now I think we are looking at the next phase in the industry where consolidation would be the theme. And probably, according to going by the numbers, it seems like Angel is winning a lot of market share. And also from from a capital protection point of view, which you are so concerned about, Santo, I mean, look at other brokers who are listed. Down easily between 14 to 48%. I mean, in some cases like Dhani Services, they're down 78% for the year already. Whereas Angel One is higher by 2%. It clearly shows that if there is a bet to make in this market on a listed broker, it's probably Angel One.
We'll see to that, CJ. Your
Next stock on my list is Santo. Again, I'm going against the market here, but ONGC. Well, the stock has taken a battering. I was down almost 17% in the past today, including today's and Friday's session. But hear me out, right? I mean, yes, the windfall gains tax is a sucker punch to the company, clearly. That totally ruins a lot of the estimates that brokerages were building in terms of average realization. But even, either way, when stock was probably 17% higher from the current level, the brokerages were arguing that the average realization that the market is factoring in is about $70 to $75 per barrel, right? At this point of time, even if you include the windfall gains tax, the average realization for FY23 should be in the range of $70 to $75 per barrel. So clearly, I think somewhere the market was expecting it, but when the event came, I think the overreaction has been too much. And I think Goldman Sachs also, entertains that point, and in the sense that they have retained their buy rating on the stock. Of course, they trimmed their target price given the sort of correction and the hit to earnings that overall, windfall gains tax will take. But clearly, I think given the fact that they expect that the free cash flow of the company will rise by about 21%. In FY24, along with the 11% dividend yield, Santo. I mean, come on, you don't get stocks with 11% dividend yield in a developing country like India. GS believes that this is still a very, very attractive bet to make, especially after the correction that we have seen.
Well, I'll agree with you on most points here, CJ. I was batting for ONGC last week, and while this development is a major negative, there is very little to be gained by going short or being bearish on the stock from these levels. There's a strong valuation support, and as you said, the kind of dividend yield that you're seeing, right, that you won't get it in too many stocks in this market. Now the big question is, will you see some runaway gains? Maybe not, but even if it's a trading bet, I would say that this is still a stock which probably can outperform, at least in the short term.
Thank you. I'm glad that you agree with me.
Yes.
HDFC Bank?
Yes, HDFC Bank, again the company has come out with it, the bank has come out with its update for the first quarter. Now CJ, just look at the numbers. There's been a lot of concerns ever since the merger announcement came in, but now look at the numbers. The growth in advances is 21.5%.
Yeah.
Now look at this number in the context of the overall credit growth in the banking sector, which is just a little over 10%, anywhere in the range of 10 to 12%. Also, CASA has, that's current account, saving account proportion has seen an improvement from by 50 basis points to about 46% now, from 45.5% earlier. Also, its deposit base has also grown pretty well, grown by about 16%. So if you look at the pure operating performance of the bank, which is the basis on which it should be judged, HDFC Bank is doing pretty well. Also, there was this overhang about the RBI barring HDFC Bank from coming up with new digital products, but now that is in the past. Besides that, HDFC Bank has also been making good progress in terms of issuing credit cards. There was a temporary ban on that as well. So all in all, things are beginning to look up for HDFC Bank, and the stock is now available at roughly 2 times its book value, which is among the cheapest in its history, considering that it's usually traded in the range of 3.5%. So the concerns about the merger process is understood, but that said, one shouldn't miss out on the attractive valuations at which the stock is now available at.
Well, Santo, I don't think the valuations are attractive. I think they are largely fair. I mean, if you look at some of the brokerage reports that have come out in the wake of the analyst meeting that the company had last month, they are generally in the range of somewhere in the range of about 2 to 2.5 times in terms of 1 year forward price to book value for the stock. Now, why this has happened, right? HDFC Bank, as you just said, is used to 3.5, and in good times 4.5 times as well. This has happened largely because of the merger with HDFC. I think that is clearly going to weigh on the valuation going ahead, given that this merger is not only, of course, a titanic merger that in itself will take about 18 months. and ties in the valuation to the the price of HDFC as well, but also the fact that the some of the operating metrics will also see some deterioration because of the merger, which will take its own time, sweet time, to recover in the next 5 to 6 years. Apart from that, of course, this is one of the stocks that has seen the heaviest amount of selling from FPIs, right? And whenever FPIs come selling, they will always come sell HDFC Bank first. So from that perspective alone, just from a trading perspective alone, this stocks become very unattractive for investors. And lastly, the doubts still persist. I mean, it's been what, 3 months, 4 months almost since the announcement of the merger, but still the market is not convinced that this merger is the best way to go forward for HDFC Bank, Santo.
Well, the stock has found good support around 1280 levels, and if you see consistently the stock has been bouncing from that. So you have a kind of a floor for the stocks.
Possibly, but at this point of time, it also seems that the ceiling is quite limited too. The next stock on my list, if you're looking at the banking space, well, this is the bank to look at. IndusInd Bank, what a performance in Q1. The stock really surged today. Clearly, it seems that the worst of the asset quality fears that the market had 2 quarters ago, that is now behind. The management, it seems, has taken care of it and convinced investors that those concerns will probably no longer crop up going ahead. Now, the focus is solely on growth, and if you look at the loan growth numbers for the June quarter that have been reported by the bank yesterday, 18% year-on-year growth, about 4% sequential growth in advances. So clearly it indicates that the bank is now focusing towards a turnaround on the loan growth side. Apart from that, the CASA ratio, very importantly, the current account and savings account ratio improved almost 110 basis points, Santo, on a year-on-year basis, which really is quite an impressive feat for a bank like IndusInd, in my opinion. And apart from, lastly, if you're looking for a good bet with a strong upside, I don't think you can look beyond IndusInd, because 47% upside at this point of time from current level. If you go by the consensus price target of the stock, which is around 1222 rupees, the stock is somewhere in the 800 range. So clearly almost 50% upside from current levels.
Well, CJ, if you look at IndusInd Bank in comparison, its performance in comparison with other banks, private sector banks, it's really trailed for some time now.
True, it has.
Right? The big blow that the stock took sometime in March of 2020, when there was this whole crisis at Yes Bank, there was a lot of chatter that probably IndusInd Bank is the next.
Could be the next one, yeah.
Some of those fears were founded actually. The corporate book did take a beating.
Yeah.
The confidence has not really revived since that level. So, the stock is almost still about 50% off its peak valuations, which means that market is still not fully confident about the stock. Also, if you see the portfolio, according to analysts who are bearish on the stock, is that it's not very well diversified enough, despite a good bit of retail proportion to the overall book. You still have heavy reliance on vehicle financing. Also, its deposit franchise is not all that strong either. It's still in the process of recovering. The bank has made some right step. It's still in the process of.
Yeah, it has seen almost 13% year-on-year growth in
deposits. At this point in time, the restructured book is still higher compared to, as a proportion of its overall advances, is still higher compared to other private sector banks, which is why it's still not getting the same kind of valuations that a ICICI Bank or Kotak Mahindra Bank is getting. Now, probably things, a change is underway, but I think it's still a long road ahead, CJ.
Of course, it is a long road ahead, Santo. I mean, in the banking space, it's not like politics where everything can change in a week's time. But clearly, I think IndusInd Bank is on the right path now. Clearly, the restructured book has been now identified at least, and probably the slippages going ahead would be a lot lesser. Let's not forget that last year the main concern for IndusInd Bank was the merger of Bharat Financial and the entire microfinance book that it had, and it was not really a healthy book. I mean, we had seen a lot of corporate governance issues also around that loan book, but clearly it seems that market is moving ahead of it. Now, if you talked about vehicle finance dominating a large share of the loan book, but also vehicle finance is the space where growth is happening right now, given the upturn in the infrastructure space, given the upturn in CV sales. We are clearly seeing that vehicle finance is one space. I mean, you yourself is bullish on Shriram Transport, if I'm not wrong. So clearly, that is one, one argument there. And the microfinance book also. I think that will also come in its own, color. It will improve going forward, and probably the management has learned lessons from the past.
Well, the last stock on our watch list this afternoon is Mahanagar Gas. Again, CJ, there's a lot of bearishness on the gas sector in general, and some of the
quite
stocks.
Obviously, Santo.
Of course, they've taken quite a bit of a beating, but now I think around these levels you're seeing some bit of buying interest coming in. We already saw a good rally, a 10% odd bounce in Gujarat Gas from its lows, and in the case of Mahanagar Gas too, the stock had fallen below 700 rupees, but over the last week or so, it's managed to rally very smartly. So, and this is again a level which Mahanagar Gas has managed to hold in the past also. Now, what is ailing the gas sector at this point in time? Clearly, it's the high spot LNG prices.
Yes.
But where Mahanagar Gas probably has an advantage over the rest of the gas pack is that it caters largely to to the automobile and resident and the households, which rely on piped natural gas, right? So this is one of the reason it's been able to get a higher share of the administered gas
pool,
price, administered pool, and this will continue in future also. Most importantly, according to Moneycontrol Pro, valuations are pretty attractive because you're getting the stock for less than 9 times FY24 EPS, the same which cannot be said of the other gas stocks. So you have the valuation comfort, and there is a lot of upside in earnings also once gas prices start to cool a little bit.
Well,
so
yeah.
Yes.
Yeah. Well, the point is, Santo, that once is a big if, and it is a big if because gas prices are unlikely to cool, my friend, for at least the next 12 months.
And this bull run was supposed to go on forever also. That also came off. So
so
aluminium prices were supposed to go one way.
I mean,
all commodity prices were supposed to go one way.
69% of growth in APM prices or administered gas prices for April, right? We saw a 69% jump on a year-on-year basis. That gas pricing formula includes global prices as well. Now clearly global prices are elevated on a year-on-year basis. They might have come off recently, but they are still elevated on a year-on-year basis, right? And that feeds into the formula. And when the new pricing comes on October 1st, almost every analyst out there who's covering the gas marketing space, they clearly expect a significant jump in administered prices for natural gas. So clearly the margin headwinds for the company are not going to go away. Yes, volumes might be sticky, largely due to the fact that they do cater to the residential space, and clearly you probably will cook still, right? You might not cook one extra dish, but that does not really affect the overall consumption that you're doing. So clearly volumes probably is still a good bet for Mahanagar, but I think margins is where the real concern is, and I really doubt that they'll be able to sustain the sort of margins that they have been seeing over the past 2 to 3 years going ahead.
Well, so what else is there to keep an eye out for, CJ?
Well, Santo, in terms of economic data, there is not really much exciting stuff out there, but clearly tomorrow investors will wait out for the India services PMI data. And remember, services industry is the biggest GDP driver in our country, so clearly it will be important to see how the services industry is improving with the lack of COVID lockdowns and restrictions, whether we have seen a full growth, a full recovery in the services space. Apart from that, in the US tomorrow, the US factory orders data for May will come out. Another important data point regarding the US economy to keep an eye out, and probably also will frame how investors expect the US economy to perform in the coming quarters. So those will be the 2 data points. Let's take a quick status check on the market, Santo. Let's see how the market is behaving 10 minutes before the close. And if you look at it at this point of time, clearly we are sort of in the flattish territory. Let me just check my Moneycontrol app.
We're seeing a good 86 odd point jump in the Nifty at this point in time.
Yes. We are firmly in the green territory, firmly.
Yes,
thank God.
86 point up.
Thank God.
50,837 at this point.
Yes, and I think, Santo, it's the small cap and mid cap space doing quite well. Small cap index higher by about 0.7%, while the mid cap index is higher by same 0.7%.
Big gains in Britannia and HUL. HUL in particular because of the easing of palm oil prices. Asian Paints is flattish at this point in time. Pharma is under pressure though. Nifty Pharma down by about
ITC,
40.
Santo, look at ITC, 2.6% gains. Also, by the way, ITC is now the meme stock. ITC is the best performing stock on the Nifty in 2022. I mean, it has overtaken.
I knew that. It was just a matter of time.
Oh, come on. Now you're going to gloat that I told you so, right?
Of course, CJ. It's not every day I manage to get a chance to do that.
No human being has ever seen the future, my friend. That said, I mean, let's look at the losers. JSW Steel down almost 5%. ONGC another 4% cut on top of the 13% cut. And TCS surprisingly is down 2.5% today. So clearly it's TCS that is weighing on the market a little bit, but HUL definitely is driving the market towards the green close.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. As always, thanks for watching, and do let us know about your feedback on the show. Paste your comments in the box given below.
Yeah, and as usual, please log into various social media platforms and follow us there, Moneycontrol, and also stay tuned to moneycontrol.com and the Moneycontrol app for rest of your financial news coverage. We'll catch you live again tomorrow 9 p.m. with all the news and views and the debates and the banters. Till then, have a great time.